Now, a lot of you have probably already seen a day in the life of an investment banker, a day in the life of a management consultant, a day in the life of a cat. But I bet you've never seen a week in the life of an investment banker. And if you want to see exactly how we spend over 100 hours a week working, then the only way for you to see that is by looking at a whole week. So in this video, I'm going to show you just that. Now I have to warn you, if you want to be an investment banker, this might put you off. So you might want to skip this video. So before we begin, let me just give you a quick background about me. After business school, I went straight into investment banking as a mergers and acquisitions analyst in central London. So now I'm going to walk you through an average week of an investment banker, if there is such a thing as an average week. Now, if you're like everyone else who starts their week on a Monday, that's great. If you're going to go into investment banking, you're going to start on a Sunday. And the reason why you start on a Sunday is because you might have clients that need information for their 9 a.m. meeting on a Monday morning. Or you might have clients that are in Asia where they have no weekends there. They're always working. And if that's your client, well, guess what? You're going to be working alongside them. Or you could have clients in the Middle East where their weekend is on a Friday and Saturday. So on Sunday, they're working and you have to work with them. So what does an average Sunday look like? I normally wake up pretty late, around 11 or 12, and I'm always checking my emails. Now, usually by 3 p.m, if I have to go into the office, I'll normally get an email from my associate or from my VP telling me to go into the office and I have this and that to do. Or if I have to wrap up a deal, I'll normally go in to finish off some work. But on this particular Sunday, I didn't get any email. So by 3 p.m, I check my BlackBerry to see if I get any emails from my associate or from the clients, and nothing. And usually by then I'm either at the gym or if I'm working on a project or I'm just out with friends. And fast forward to 6 p.m, still nothing. So I pretty much decide to make plans with my friends and see what they're going to be doing. And normally on a Sunday, we normally go out to a restaurant, then go to a shisha cafe and just play poker. By 12, head home and just crash. Now, Sundays, you're not going to be really busy. It just depends on what kind of clients you have and how much work you have. Now, let's take a look at Monday. So, 9 a.m, walk into the office, drop my bag, get my first cup of coffee, walk back into my office, open up my emails, and chaos begins. So I start working on the IM, which is for a sell-side M&A deal. It's a large technology company, which is based in Hong Kong, but also has an office in the UK. And we're going to call this Deal 1. And if you're wondering what an information memorandum is, or an IM for short, it's a large document which analysts and associates will spend half their time working on. And this could be in the hundreds of slides. And it has everything about the business, from the product itself, their customers, their clients, their supply chain, where they source their products, as well as the financials of this company. And we use this IM in order to go out to investors and to potential buyers to sell this company or to buy the company. Now, from 9 to 11 on a Monday, I normally just get a torrent of email coming in, either from internal emails from my team members or from clients. And usually a lot of them I'm just CC'd into them for no other reason, just for the fact of me just being in the team. I saw that some of the emails that were coming in were from Deal 1 and they were sending over some amendments. So I decided to wait until they send over all the amendments before I start actioning them off. 1 p.m, I get an email from my VP telling me to drop everything and start drafting a teaser for another sell-side M&A deal. Now, this is going to be for a small semiconductor company, and the idea here is to find a bigger company that's going to acquire this company. Now, this usually happens. I'm working on something and then I get an email telling me to drop everything and start working on something else. And by the time I'm done with that, it's already 11, and hence why we're in the office for long hours. If you're wondering what a teaser is, or sometimes called an executive summary, it's 1 or 2 slides and it gives you a high-level overview of this company. But you can't explicitly say what company it is unless they've signed an NDA. So we have to pretty much give a high-level overview, a quick summary of the company, some financials of the company. We then go out to potential buyers of this company and tell them, hey, are you interested in buying this company? If so, let us know, then we can proceed and giving you an NDA. So that's pretty much what a teaser is, or an executive summary. Now, since this was a Swedish company, So finding information on this was pretty difficult, and I had to liaise with the company to try and get some information. And because of the time difference, it took a lot longer than expected. So fast forward to 8 p.m. and my VP walks into the office, and it was great timing because I've just finished the draft version of my teaser. So I sent it to my VP and I CC in my associate, because otherwise he's going to be wondering, what have I been doing all this time? I'm supposed to be working on the IM. Why am I not working on the IM? So I send over the teaser and I wait for amendments. 8:30, we go out for dinner. Now, usually I go out for dinner with my team, so me, the associate, and the VP, or I go out with some of the analysts. Now, because my team, we spend so much time together in the office, we've gotten pretty close, so sometimes we go dinner together. So 9 p.m, we head back into the office, and I get an email from my VP with a list of amendments to the teaser. So wording issues and a couple numbers. Now, literally nothing gets past him. He's ex-Harvard, ex-McKinsey, worked in investment banking at Credit Suisse and Lazard for over 20 years. And for those of you with the interview guide, a lot of the vice president commentary and some of the interview questions and answers, which you'll get from the VP, as well as some of the tips, are from him. So if you're interested in seeing the kind of questions which you can expect during your investment banking interviews, as well as word for word responses, then check that out after this video. I'll leave a link in the description below. So 11 p.m, I discuss with my VP the final draft of the teaser, as well as go through a list of potential companies to contact to sell this company, as well as a couple of private equity firms who might be interested in buying this company. And we finalize a list of 8 companies and a couple PE firms to contact. So around 12, I check my emails to see if there's anything urgent from the MD or from anyone else, from any clients, and there's nothing. I contemplate whether or not I should continue with the IM for deal 1 or not, but it's already 12 and feeling a bit tired, so I decide to just go home and I watch an episode of Suits and then I just crash. Now let's move on to Tuesday. So 9 a.m, walk into the office and drop my bags, grab my second cup of coffee for the day. I normally average around 6 cups per day. So open up my emails and I get an email from my VP that says we're good to go with the strategics and financials. Now, in investment banking lingo, when we say strategics, it means that we need to find a company, a large company that will buy our company. And whenever we say financials, it means that we're trying to get private equity firms to buy this company. Now, normally, whenever we have to send out teasers, this is the job of an intern. Now, since we didn't have an intern at this moment, that job then falls onto me as the analyst and the secretary. Now, this is a very boring task, but we have to do it. And around 10, I get an email from my VP that adds another 4 South Korean clients to our list. Now, whenever we have to deal with South Korean clients or clients which are across the globe, I pretty much have to call them up, because if we've never established any kind of connection before, it's best if we do it over the phone and by speaking to them as opposed to just sending an email. And that means I'm going to have to come back into the office at 5 in the morning, which is great for me. Now again, normally I have the interns do it, but since we didn't have one at this time, I'm going to have to come back into the office the following day at 5 in order to call these South Korean clients. So by 11, all of the teasers have been sent out to all the strategics and the financial companies. And all that's left are some of the French companies. Et si vous savez pas, je suis français. And because I'm French, I normally like to call up some of these companies and speak directly to someone in French who is in corporate development. It makes the process a lot easier as opposed to sending emails, going back and forth with follow-ups. And it gives me a reason to speak French and show off in the office. So there's always that reason as well. So around 12, I start working on the information memorandum for deal 1. And I get an email from deal 1 telling me that there's been some changes in terms of management structure. So they're now hiring some people. So I have to update some of the slides. Then around 1:30, I go out with some of the analysts to get a quick lunch, and we just catch up quickly and we just head back into the office. Now, lunches are either going to be work lunches where you eat whilst you're working, or if you have some time, and you can pretty much just go out with some of your friends or some of the analysts or the associates and just have a quick lunch there. But most of the time, you're going to realize that you're going to have work lunches where you're going to bring your food to your desk and eat whilst you're working. And it's extremely rare, the fact that you can actually go out for an hour or for 45 minutes and eat at the restaurant. 2 p.m, head back into the office and I finish the IM for deal 1, send it over to my associate for reviewing. And then I also get an email from my secretary telling me that she's sent over all the teasers to her side of the contact list. Now again, because we don't have an intern, we pretty much split the task of what an intern would do between me and the secretary. So all of the teasers has already been sent out except for the South Korean ones, which I'm going to do the following day. 3 p.m, things start to slow down, so I then look at some of the resumes. We're going to be interviewing a couple of candidates from 4 to 7 back to back, so I review some of their resumes and just get ready. Now, because I'm a senior analyst, so normally analysts won't interview analysts, but because I'm a senior analyst, I can interview new incoming analysts. So graduates, those who are transferring industries. Now, I love interviewing candidates because it's a change from what you do on a day-to-day basis. And we normally have interviews at least once a month, whenever we have new interns, new analysts coming. And once a month or once every 2 months, we normally have interviews. And currently, we're looking for an intern and an analyst. So from 4 to 7, we pretty much had back-to-back interviews with 3 candidates. 1 candidate was from a finance background, 2 were from non-finance. I think they were from engineering and law. And it went terrible. Neither of the candidates could answer basic technical questions on what's the difference between enterprise value and equity value. They couldn't even walk through a DCF. They couldn't even answer a simple question on financial statements. So there's no way they can start investment banking. And after I was through with them, my associate came in and pretty much grilled them. And after that, my VP just didn't even bother because they couldn't answer basic technical questions. For those of you that are looking to get into investment banking, you need to know your technical questions. You have to know how to answer them. Otherwise, there's no way you can actually pass the first round of interviews, let alone second and third round. 7 p.m. We decide to go through a couple more resumes because the 3 candidates weren't successful, and we schedule more interviews for the following week. 8 p.m. my team is going out for dinner, but so are some of the analysts, so I decide to go with them. 9 p.m. I get a list of amendments for the information memorandum, and this is how it goes. I work on something as the analyst, I send it to my associate for reviewing, sends back a list of amendments, I correct it, send it back again, and then I get another set of amendments to do, I then send it back, and then this process goes back and forth until one of us gets really tired. Usually it's going to be the associate that gets tired, and then that's it. And some of these amendments, they're really simple stuff like wording, font, formatting, colors, realigning some of the slides, basic stuff. 11 p.m. I get asked to do a pitch book for an online social media company. We're going to call this deal 3. Now, this is the 3rd sell-side M&A deal that we've gotten this week. And this isn't the first pitch for this company. We've pitched them before, so it's going to be relatively easy for me to do a second round of pitch. Now, pitch books is what an analyst can expect to spend half of their time working on. And it's often the reason why we spend all-nighters in the office, because we have to work on pitch books. Sometimes you can work on multiple pitch books. Now that is the worst thing that could ever happen. And the reason why we create pitch books is because it's to win business. So your MD, your managing director, is going to go to his clients or her clients and say, hey, this is a good time for you to sell your business, or it's a good time for you to acquire that business, or it's a good time for you to raise capital. And the way that he or she is going to present those ideas is by making a pitch book. And as the analyst, you're going to have to come up with all of these really pretty detailed presentations which are going to be presented in front of managing directors, in front of management teams. So a lot of time is going to go into this. A typical pitch book is going to pretty much say why they should go with you. Why should they choose you as their lead investment banker for this specific deal? So in a typical pitch book, you're going to have your credentials, your industry experience, the ideas, market trends, a financial model, as well as bios of whoever is going to be on the deal team. Now, depending if it's going to be a sell-side M&A deal or a buy-side M&A deal, you will adjust the numbers to reflect that. So if your MD is going to a company in order to try to say it should sell itself, you're going to inflate some of the numbers and some of the assumptions to say, hey, look, if you sell yourself with us, we can get you a high valuation. Or if it's going to be a buy-side deal, where you're going to go to a company and say, hey, you should buy X company. We're then going to go to this company and say, hey, you should buy X company because look, the valuation is really low. So this is how you're going to structure it depending on who it is that you're targeting. And if you want to know how to build pitch books and how to create financial models step by step, Then check out our Excel financial modeling course and virtual work experience, where we literally show you how to build a financial model and a pitch book all together. And considering that analysts will spend almost half their time building pitch books, it's really useful to learn how to do them now so that you can use it during your interview. Now, the email for the pitch book didn't include any timing, so normally whenever you get an email that says to create a pitch book or to start drafting a teaser and there's no time, then you have time, unless it says, okay, work on it right now or drop everything else. And because there was no timing on this pitch book, I assume it's not in a rush, so I can pretty much work on it tomorrow. 11:30 p.m. I decided to leave early since I'm going to have to come back in the following day at 5 a.m. in order to contact some of our South Korean clients. Wednesday, 5:30 in the morning. I get there pretty early so I can speak to some of our South Korean clients. And I explained that we have a possible acquisition target of a semiconductor company based in Sweden. Now, they're all pretty happy, so I send over the teaser and wrap up the conversation pretty quickly. After that, I head over to a meeting room so I can take a quick nap. Pro tip to every incoming analyst and associate into investment banking. Whenever you've had less than 3 hours of sleep, the best thing you could do is to book a meeting room and take a nap in there. Now, don't worry, if you walk by an interview room or if you go into an interview room and you see an analyst there by themselves, there's a 50% chance that they're taking a nap or 50% chance they are there talking to a recruiter. And that's normal. 9:30. After a 2.5 hour nap, I pretty much get up and walk back into my office. And my associate looks at me and tells me he has a gift for me. So I walk over to my desk and I see 3 massive boxes of legal documents. And I know exactly what it's for. Essentially for deal 1, some of their products is owned by Alphabet, Google. So we have to establish where the liability ends. So if we're going to sell deal 1, if we're going to sell this company, and if something bad were to happen, who's going to be in charge of fixing it? So for example, if you were to buy a house and the next day the house breaks down, is it your fault or is it the seller's fault? And that whole process, that due diligence, we have to do the exact same thing for companies. We need to know who's going to be liable if something bad were to happen in the next day, in the next year, in the next 5 years. And you can pretty much ask the company, or sometimes they'll just send you all their legal documentations and you have to look for it. And in this case, they sent us over 3 boxes of documentation which I have to go through. But unfortunately, I don't really have time to go through that right now since I have to work on a pitch book. So 10 a.m. I start drafting the pitch book, and again, since we've already done a pitch book for this company, it was pretty much just renewing some of the numbers, changing some of the wording around, and just making it look a bit different. 2 p.m. I finish with the pitch book and I print a copy and put it on my associate's chair. Now, another pro tip. Whenever you finish your work, instead of just emailing it to your associate or to your VP, you have to print it out, staple it, and then put it on your associate's chair. The reason you put it on their chair, not on their desk, is because if you put it on their desk, it's going to get lost in the sea of other documents there. But if you put it on their chair, they have no choice but to pay attention to it. Again, if you want to know about all these tips, just take a look at our interview guide. We'll pretty much have everything there. So around 2, I pretty much go and get lunch and come back into the office. And I heard some of the analysts were talking about this new type of alarm clock. It's a light alarm clock. And so instead of waking up by sound, there's this lamp that's going to continuously get brighter and brighter, and apparently it's easier to wake up by that. Now, I didn't actually manage to get it. Now, what I normally do is I set 3 alarms on my phone, put my phone across my room, so when it rings, I'm forced to get out of my bed and walk across my room in order to turn it off. And that's always worked for me. Now, if you have any idea about this lamp alarm clock, I've never really tried it, but if you do have it and if it works, just let me know in the comment section below. Around 5 p.m, I start getting a couple of emails from my managing director, who's currently in Spain at a Telecom conference in Barcelona. And he wants fact sheets, so a research document on some of the companies which he's seeing there. And some of these companies, they're pretty small. There are a couple of Italian companies, Israeli companies. So it's pretty difficult to find it on google.com. So what you do in this case is, if it's an Italian company, you go on google.it, put in the company's name, find the fact sheet, you then copy and paste all the information on there, go into Google Translate it into English, paste it back onto the original document, print that off as a PDF, and then you send it over. Now, those are just some things which you're going to have to get used to if you're going to be working on cross-border M&A deals. 6 p.m, The management team for deal 1 calls and sends over a list of amendments to their financial positions, and this needs to be reflected immediately on the presentation that they're going to have tomorrow morning. Honestly, it's nothing really material. Some of these changes are really simple changes, but the issue is my managing director is currently in Spain and was supposed to come back into the office tonight before heading over to Hong Kong the following day. But he's now going to go home directly, so I'm going to have to do all of these changes, go to his house, drop it off, and then come back into the office. 8 p.m, I pretty much finish with a draft IM with the new financials in the document, print 12 copies, bind it, and head over to my MD's house. 9:30, head back into the office and grab a Starbucks along the way. I think that's 6 cups for the day now. Around 10, I get an email back from my associate with amendments for Deal 3's pitch book. Around 12, I finish off all the amendments and send it back to my associate for another review. So, 1 a.m. in the morning, like I don't have anything else to do, I'm considering whether or not I should start going through those 3 massive boxes of legal documents. And I only need to find one line that's going to tell me whether or not who's going to have liability. Is it going to be Alphabet or is it going to be the seller? Since it's already 1, didn't have much sleep the day before, so I decided to just do it the following day and head home. So around 2, get home and I just crash. Thursday, 9:30 in the morning, I get into the office, put my bag down, grab a cup of coffee and open up my emails. I see a lot of the strategic companies and the financial companies who we initially sent the teaser to for deal 2, and a lot of them came back requesting more information. Now, before we can send them more information, I have to get them to sign an NDA. And an NDA is a non-disclosure agreement. So essentially, whatever we send them after them having signed this NDA prevents them from sharing this information, prevents them from acting on this information. Funny thing is, there's no way of enforcing an NDA. So even if they do sign an NDA, it doesn't matter at all. So around 10 a.m, I decided to go through the 3 boxes of endless legal documents that's going to hopefully tell us who's going to have liability if something were to happen to Deal 1's product lines. Some of their product lines are owned by Alphabet, so we need to know who's going to have liability if it breaks down or if something were to happen. And after 6 hours, I managed to find a vague line highlighting that Alphabet is not going to have liability. Now the issue is, this is a very important concept. If we manage to sell this company whilst someone else having liability, then the value of this company increases substantially. So it's worth doing this type of research. So after 6 hours, I managed to find a vague line saying that Alphabet, Google, is not going to have any liability. Now my VP isn't happy enough, so he decides to email the client, and within 2 minutes, they come back to us saying what we suspect in the first place, that Google is not going to have any liability. So thanks for wasting 6 hours of my time. Due diligence is important whenever you're going to do an M&A deal. You have to know who owns what, who owns who for how long, who's on the hook for what. If someone buys a company and that company breaks down, who's at fault? So due diligence is a very important part of any M&A process. Now the problem is, sometimes you can hire an audit firm or a legal team that will handle it, but sometimes if it's a small thing, you're going to have to do it. Now, I would love to tell you that this is a one-off thing, but it happens so many times. 4 p.m, I get some amendments on the information memorandum and I start to action that off for deal 1. Around 5 p.m, I get a stream of emails from the CEO of deal 2, the semiconductor company, with a list of assumptions on how to proceed on how to build a financial model. So I pretty much wait until they send over everything before I actually start actioning it off. Around 8, I get an email from a friend of mine from France and wants to meet up quickly before he has to go back. So I pretty much take a half an hour to go to dinner with him. And since he's also in investment banking, we pretty much talk about what anyone else to talk about. Analyst to analyst conversations tends to be about the most annoying thing your senior banker did in the team this week. What are your plans for next year? Are you leaving investment banking? Where are you going to go for your vacation? And when are you going to quit investment banking? Those are the 4 topics we always talk about, analyst to analyst. 9 p.m, head back into the office and I start to catalog every company which got back to us, those who are interested in proceeding further with deal 2, those who are interested and who have the potential to be a potential acquirer of deal 2. I catalog every company and I send it over to the MD so that they can send it to the client. Around 11 p.m. I get an email from my VP that says he wants to see the company's history on the information memorandum for deal 1, and he tells me to be creative, i.e. find a picture, be creative, and just make it look good. Now, it's already 11 or 12 at night. I don't have time to teach myself Photoshop. So what I do is I go on the company's website, copy and paste their front page, put it on the slide, send it over, and my VP loves it. I don't think he's gone on the company's website before. 1 a.m. I decide to head home and just crash. Now let's talk about Friday. Fridays always start off as being a good day, but you're always one email away from being completely ruined and becoming the worst day of the week. The problem is you don't know how Friday is going to be unless Friday finishes. So typically a Friday, well this particular Friday, came into the office at 9:30 in the morning, dropped my bag, grabbed a cup of coffee, and opened up my emails. I noticed that my managing director has sent over an email asking me to investigate why has deal 2 share price gone up by 12%. And the reason why I chose this week is because of this particular event right here. So deal 2, the semiconductor company in Sweden, the share price went up by 12%. This is very rare. The only reason why this would happen is because something major has happened. So I go online and start researching it, and the share price is up by currently 11%, and there's no news announcement. I start to freak out because the only reason why this company's share price would have gone up this much is because someone has figured out that we're selling the company, and I'm the one that is distributing the teaser. So someone has acted on the information that I provided. But here's the thing. If you're going to be sending teasers of a company to its competitors, then it's more than likely that those people who are going to be reading this teaser, even though it's a small piece of snippet of the company and you're using a code name, just by a quick glance of the financials, they're going to know who that company is. Now, Fridays and Mondays are pretty much the same in terms of clients and everyone asking for data. You're going to get a series of emails just handling data requests, just handling presentation requests, either if it's an external client or internal members asking for stuff. So whilst that's happening in the background, I have to finish off some of the tasks that I have to. So around 12, I start working on the amendments for the information memorandum for deal 1, and I contact the management team for deal 2 in order to complete their financial model. Around 4 to 5 p.m, things start to slow down again, so I could go online and I pretty much do some online shopping on Amazon. 6 p.m, I get a few emails I have to action off. 7 p.m, I pretty much finish the first draft of the financial valuation for deal 2, and I send it over to my associate to review. At 9, I send over the information memorandum for deal 1 for another round of review to my associate. And by 9:30, I see that I don't have any urgent email requests, and which is a good sign. So after that, I start texting some of my friends to see if we can meet up. So by 10, I'm at a Moroccan restaurant in central London, surrounded by other investment bankers. And by 11, at a friend's house, somehow still managed to go to a shisha cafe and play poker by the end of the night. So now Saturdays. Now Saturdays are usually kept to catch up on work, or if we're wrapping up a deal, or if there is some emergency that we have to fix. But whenever we go away on Saturdays and Sundays, it's non-formal. You can pretty much wear anything you want. Now, of course, it has to be something decent, but it's more casual than formal. So 11 a.m, I wake up, go to the gym, catch up on television. Around 1, check my emails, nothing. Around 2, I get an email from my associate telling me that he's gone through my information memorandum and he has a list of amendments for me to do. So head back into the office at 3, I finish off all of the amendments by 6, and at 7, call some of my friends and see what they're going to do, and by 7, we're at a shisha cafe again, like we don't have anything else better to do, and we play poker. And by 9, we get dinner, and then we go watch a movie. I think Avengers came out. Yeah. Okay, so you might have noticed that I didn't do any all-nighters this week, and that's because I didn't really need to. Now, normally I would do an all-nighter if I have multiple pitch books, but since I only had one pitch book this week, and it wasn't a brand new pitch book, it was for a company who we've already pitched before, I didn't need to spend 8-9 hours researching and just data gathering everything. The amount of hours you spend in the office is going to depend on the amount of live deals you're working on and how demanding your clients are. And since we only have one live deal, which was for deal 1, so we had leeway in terms of our hours. But pretty much this is what you would expect from an average week in investment banking. So thanks for watching. Subscribe if you want more information on what it's like to be an investment banking analyst in Central London, and drop me a comment if you want anything else. And of course, check out the investment banking interview guide and financial modeling course if you want to know more.